Namaste, welcome to Arthaniti. Today, let us discuss a new product which has entered the life insurance market. Now, this product is becoming very popular, is creating a lot of buzz amongst the buyers of life insurance. This new product is called the zero cost term life insurance plan. Well, zero cost does not mean you have to pay zero premiums and still get insurance. Correct? Let us see what a zero cost term life insurance plan is. Now, before we go on to discuss this new product, let us first check the existing two variants of term insurance that are already available in the market. The first one is the regular term insurance policy. Correct? It is a vanilla term insurance policy wherein you pay premium every year and you get a life cover. So till the time you keep on paying premium, your life is covered by that policy. Now, if the policy before the expiry of the policy, if the policy holder dies, the nominee mentioned in the policy gets the sum assured in case of a regular term plan. Correct? But say the policy is for 35 years and the policy holder survives the whole period. At the end of 35 years, when your policy expires, the policy holder does not get any money back. Correct? This is a regular term insurance plan. The second option, which is already present in the market, is the return of premium term life insurance. Return of premium. Now, in this product, what happens is, like a regular plan, in case the policy holder dies within the policy period, the nominee gets the sum assured. Okay. Now, if the policy holder survives the policy period, say the policy is for 30 years and the policy holder has survived that period of 30 years, what happens in case of return of premium plan is, at the end of 30 years, when the policy is going to expire, all the premiums that the policy holder paid for the last 30 years, he or she will get the premiums back. Return of premium. The name itself is self-explanatory. So the policy holder gets all the premiums that were paid for the 30-year policy back at the end of expiry of the return of premium plan. GST, which is deducted at 18%, will not be returned back. So that GST expenditure will be deducted from the premiums that were paid over the policy period and the remainder will be returned back to the policy holder. This is what is a return of premium plan. Now the new entrant in this segment, the zero cost term life insurance plan. How is it different from the first two? Well, in a zero cost term life insurance plan, again, if the policyholder dies within the policy period, the nominee will get the sum assured. But in a zero cost term life insurance plan, there is an exit option which is provided by the insurers. The insurance company gives an additional feature of exit. Now, normally what happens is, say in 2023, my age is say 25 years and I have purchased a 30-year zero cost term life insurance plan, say 35 years till the age of 60. I have purchased a zero cost term life insurance plan. Now, what option the insurance company gives me is that after a set period has gone by. So, it is not that I purchase a policy in 2023 and say in 2026 or 2030, say after a period of 4-5 years, I get an option to exit and get all the premiums that I have paid till then back. That is not the case. In case of zero cost policies, the insurance companies give a one-time exit option, but it has a significant time lapse. So nearing your retirement age, some companies give that option from the age of 55, but normally your retirement age, which is normally 60 years, is where the insurance company gives an option to exit the policy. Now, if at the time of your retirement, which is before the policy term ends, say my insurance product which I had purchased today when I am 25 years of age for a period of 35 years and gives me an exit option at 55 years, and I exit from that policy. So at the age of 55, when I exit from the policy, all the premiums that I have paid for 30 years minus the GST will be given back to me. How is it different from the return of premium plan? Well, in the return of premium plan, you will have to keep on paying premiums till the maturity of the policy. There is no exit option before the policy expires. In a zero cost premium plan, you have that exit option before your policy matures. Correct? So this is an additional feature. But there are some catch points here which you have to ponder before taking a decision to buy this product. Okay, first of all, if you are thinking of buying a return of premium policy, why? Because just keeping on paying premiums year after year and say you survive the whole period, your regular term plan is not going to give you anything back. Some people take it as a waste of money, but please understand, insurance is not an investment product. Don't expect things to get back. That will happen only once we die. Correct? So insurance is a expenditure. Always take it as such. The return on premium plans have a very significantly high rate of premium, normally double the premium than what your regular term insurance plan offers. Correct? So regular return of premium plans have a very significantly higher premium that you have to pay. In case of zero cost premium, the third new option, the premiums are more or less similar to the regular term plan. Correct? But one thing that you have to keep in mind if you are opting for this option is that at the time of getting the premiums back, if you execute the exit option, say 30 years down the line, at the time of getting the premiums back, the GST that is deducted will be at current prices almost 18% every year, which you are not going to get back. Correct? Plus the premiums that you have paid, say for 30 odd years, 3 decades, if you get back the money at the time of exercising the exit option, the value of that premiums that you have paid is going to be significantly lower. The purchasing power of the money of the same amount, correct, that you have paid for 30 years, if you get back the same amount of the 30 years, the purchasing power of all that money has reduced. Thanks to what? Thanks to inflation. Correct? So, keep these two things in mind. And what I think is this is majorly a marketing gimmick, so as to say. And if you know that you are going to be financially independent early on in your life, then I think going for a regular term plan is the best option suitable to you. Correct? Alternatively, what you can do is, instead of getting the same money back after 30 years, which is going to lose its value, think of alternative investment products where you know that your money can rise significantly and help you beat inflation. So I wanted to explain about this new product which is creating a lot of buzz in the insurance market, and know the finer details of how the products differ, and then take decisions whether to go in for a zero cost premium product, even though it sounds as if you're going to save a lot of money in it. Correct? So I hope you liked my video, and any questions you have regarding the product, please feel free to comment. I will be happy to help you. Until next time, see you. Goodbye.